Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my pick in April. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been negative since we grew less than I expected in the daily number of visits, and we have experienced a high decrease in daily new subscribers and visits. Finally, the viral short is over. As a result, this month we have not reached the goal of reaching 4,000 subscribers. So for this month the goal will be to reach 4,000 subscribers. Do you think we will make it? The evolution of the investment made last month has been good, as it has grown more than 5%, but in overall the portfolio has performed in a poor way with almost 10% downside. Nike again and T. Rowe Price are the worst performers this month with over 10% and 20% decrease respectively, while the best performers are AbbVie, Amdocs and Johnson & Johnson with an upside. Additionally, more good news is that during this month we have received 4 dividend payments. Specifically 87 cents of NextEra Energy, €1.46 from Starbucks, €1.06 from Hershey and 97 cents from Johnson & Johnson. That makes a total of €4.36. However, this month I would have received more dividends, but due to a position transfer from Scalable to Interactive Brokers I'm waiting to receive some of them. This month I will add a company that I don't have in my portfolio in order to increase my diversification, and due to the low exposure to tech sector companies in this portfolio and also good momentum to invest in them after a slight correction, I decided to add a new tech company. That is why this month I am going to only analyze one company. This company would be the well-known Google. I know that currently the expectations for this company are not so good, due to the uncertainty about the AI and Google's search utilization downside. But what are the numbers telling us now? Let's dive into them. Let's start by checking the dividend safety. Despite it has started recently to pay dividends, we have the free cash flow payout ratio of 2024 that is 13.79%, so a ratio below 25% and indicating that continues reinvesting the money into the AI and other investments like the purchases of new companies. However, we don't have a clear history to assume the dividend growth in the future, and the impressive dividend growth that investors were expecting last year could transform into a 5% dividend increase like Meta or Salesforce, companies that also start to pay dividends during the last years. This is not bad news, because the increase is over the inflation rate and allocates the free cash flow in company growth. Regarding dividend yield, currently Google is very close to the all-time highs and went above the average of the last year dividend yield value around 0.45%. Continuing with the evolution of the revenue and earnings, this one has been so positive during the last few years, growing at around 20% compound annual growth rate since 2019. Now, if we look at the evolution of free cash flow over the last 5 years, it is also as good as I am expecting in one company. But during the trailing 12 months the growth has decreased a little bit. However, looking at free cash flow yield, year-to-date has returned to its 5-year average from 2% to almost 4%. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. In this case, Google is very clear that it has a buyback program reducing them by around 2.5% since 2019, and it is to be mentioned that during 2024 they spent around $60 billion in buybacks. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. Google is below the 5-year average price-to-earnings ratio, close to 2022 valuations, and the company has growth since then. So it would be a sign of an undervaluation. Moving on to shareholder yield, here with 3.76% yield and close to the 5-year average, and indicates that Google is more active in regarding shareholders through buybacks, dividends or total debt reductions. Additionally, looking at the financial health, currently Google, it has negative net debt, meaning that with cash and cash equivalents, it can cover its total debt and still have almost a year's worth of free cash flow left over. However, Google's trend seems to be to increase its debt each year, and we can see how they've split their net cash in half since 2020. So it remains to be seen whether Google can sustain its growth rate by optimizing its debt growth. Once most of the important metrics have been analyzed, then this month we enter the Interactive Broker and carry out the operation, looking for the Google ticker. Remember that I will always try to make a purchase in order to have a commission less than 1%, and here in Interactive the commissions are 35 cents per trade. So, putting 1.5 shares would be an investment of almost $250, which means 0.15% commission. So with this broker we are reducing the commission a little bit, and in the long term we will see the difference. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, Google's ticker, and finally I need to look at the euro to US dollar exchange rate because its price is in dollars and I want to reference my investment in my currency. As you can see, it gives me a total of €225.33, adding the 32-cent fee. As you can see, this month I need to adjust my portfolio position in order to cover the cost of the depositary change, which is around €100, losing almost all the profit I have in the portfolio. I sell Evolution shares that I would repurchase in the next few months, since here where I live to have a deduction in losses on personal tax payments is necessary to wait 2 months to buy it again. Now let's move to the position sheet and placing the ticker in the first column. It automatically adds the number of shares and the average price per share. We add the technology sector reference in the column, and as you can see we have more than 3% downside in only 2 weeks. Additionally, this investment will allow us to reinvest 0.01 shares annually via dividends. As we are already in the month of April, I will move on to the monthly value sheet, and in the month of April 2025 we will write the €3,030.60 that our investments are worth in the market. This month the portfolio made a huge downside of 7.62%, which is more than the 5.75% that S&P 500 has obtained in the same time period. So this month we underperformed the market again. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you liked the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time, happy investing!